cryptic humility.
Whoa, what's up, guys? And welcome back to Cryptic Humility. This is our second episode, and today we're getting into the history of the foreign exchange market. My name is Vanessa Hurley. I'm the host of this podcast, and the podcast's intention is to bring justice to people in the foreign exchange and crypto markets who may be beginners, who want to learn about the markets, but need to be protected against scams, fraudsters, and just people with imposter syndrome. Why did I just think about like your posture? That just like messed me up. And can I just tell you guys, like speaking candidly, I have tried to record this episode for the last half an hour, and the last time I just talked myself all the way through part one and I wasn't even recording. So this is going to be a very candid podcast episode, but I wanted to say that last episode we were talking about Q&As, and I said that at the beginning of every episode I would be doing Q&As from the previous episode. So every episode we post on social media, if you have a Q&A, leave it on social media, like commented under one of our videos. Like we're on X, we're on TikTok, and we're on YouTube. Had to think for a second. But we will get your questions answered through the podcast if you comment. So make sure to check out the first intro podcast episode so you can get to know me and kind of why we're here. But you also want to hear that in the last episode, I was talking about that we are experiencing a lot of issues in the crypto and foreign exchange market in regards to credible people. It's not to say that I am the most credible around, but I want to stand up for us and help us and guide us in the right direction for the foreign exchange market and crypto. In that episode, I talked about that a lot of people, specifically in crypto, there's a lot of noise. We're hearing a lot of noise from people, but there's not a lot of facts and foundational education about why we got to the crypto markets, how cryptocurrency evolved. Before crypto, there was the foreign exchange market, and before the foreign exchange market, what was there and how did we evolve to this point? I think it's so important to know how we evolved to this point to better understand how we got to crypto and how crypto could potentially be for us in the future. So after going on that rant for like 36 minutes in the last episode, I want to dedicate this whole episode towards going over the history of the foreign exchange market and teaching you about the foreign exchange market. Obviously, there is so much to cover in this podcast episode, so we're just going to get right to it. And I don't want to talk too long about the history, but I just want to give you the gist of how we got here. So in 6000 BC, the Mesopotamia tribes and the Babylonians were the first that kind of discovered the bartering system. So obviously, bartering is trading one tangible item for another tangible item, and in both tangible items, you see some form of value. This has been going on for centuries. Like I can't even like wrap my brain around how many centuries it's been, but it was since 6000 BC, so you can take a guess that it's been many centuries, and I can't do the math right now. But we did this for a huge period of time, and just sharing, trading, and seeing value in things to help us evolve as a society. Eventually, as that system got much more popular and used, we then went into the Metal Age. The Metal Age was gold and silver. So whether we bought things with gold and silver or traded gold and silver for tangible items, whatever it was, we relied on gold and silver as a tangible, valuable item for other tangible, valuable items. This was really popular, and around 1834 was when the gold standard was really becoming an official idea in our society. And basically what the gold standard is the amount of USD that we print, for example, has to match the amount that we have in gold reserves. And to anybody, this seems like a great idea. We might avoid being in debt. We are equal and we're established and we're stable with our funds. But the only issue was when World War II ended in 1945, we realized that the gold standard was no longer going to be feasible. It was not going to be feasible because after European countries lost in World War II, they had to pay back war debt. And if they only had X amount of gold reserves that had to equal the money that they could print, how were they going to pay off that debt? What if they couldn't rush in enough gold reserves to pay off the debt? So they ended up having to print more money, which obviously caused inflation, but we're not going to get too deep into that. World decided that there was an issue with the gold standard, and that's why, and I'm sure you might have even heard this before, but 44 countries got together in Bretton Woods, New Hampshire, to establish the foreign exchange market. And not only did they establish the foreign exchange market after World War II and realizing that the gold standard wasn't going to be feasible anymore, but they also established the World Bank. We are going to get into the World Bank extremely at the end of this podcast episode, because if you want to start trading in the FX market, it's really important to understand the influence of world banks and, what they do in the market. But obviously, we're going to keep going on this chapter for the sake of it until we get there. What was my point? Okay. Bear with me. It's Saturday, guys. Bear with me. The whole intention of the World Bank was to regulate inflation that was going to happen in the foreign exchange market. And actually, they decided at the Bretton Woods conference that the USD was going to back the foreign currencies. And to this day, 60% of foreign currencies are still backed by the US dollar, just because we're very, well, I don't know about recently, but we are a very stable economy. I'm saying that very shakily for where we are right now in our world, but that was the concept. The concept was to establish the foreign exchange market, which we're going to talk about right now, and to establish the World Bank. So the foreign exchange market is an over-the-counter market where you can buy, sell, trade, and potentially profit off foreign currencies. Foreign currencies are the euro, the USD, the Japanese yen, the Aussie dollar, the Great British pound, and any other currency coming from any other country that you could potentially trade. A lot of people that you will see on the platform is investors, brokers, investment companies, regular day traders, long-term day traders, and really just the general public that is interested in buying and selling currencies for profit. So I'm going to tell you guys two stories. Number one is I am infinitely going to bring this up multiple times through the podcast, but I used to work at the bank, and working at the bank, we would do Forex conversions. So I talked about this a little bit in the last podcast episode, but people would come into the bank. I'd be like, hey, how are ya? They'd be like, I'm going on a trip to Europe and I need X amount of euros for $300 USD. I have $300 in USD. Give me whatever that equals in euros. So obviously we'd get the currency conversion rate. We'll talk about how to read the currency conversion rate up on the bank, like supplied it to us. We'd do a conversion. We'd be able to tell them based off what the euro is worth right now, you'd be able to purchase X amount of euros for 300 USD. And then we'd have to go through this whole process where just converting and the system, and it was honestly like very stressful. The foreign exchange market and purchasing on the foreign exchange market is not as stressful. But working at the bank, people just did that when they needed tangible cash because they were going on a vacation or going to a trip, going to that country. A lot of people that you'll see in the market are trading for profit, or trading at kind of like, how do I say this? Like if their portfolio was a little bit riskier, they might add assets of the foreign exchange market to kind of balance out and stable out their portfolio of trading or their investment portfolio, depending on which foreign currency they're trading. But nonetheless, also, I'm going to tell you guys, I used to Forex day trade. If you have not watched the first episode, definitely watch the first episode because you might have a little more empathy for me being out here, because I started out as a Forex day trader. It was very difficult. I wasn't very much educated on how Forex day trading worked. I'll talk to you guys more in detail about it, but I basically spent a couple of years trying to Forex day trade on the platform, and it was very interesting. It was definitely a learning experience for me, but I'm sharing with you guys today my mistakes in Forex day trading. So if you're genuinely interested in getting started in it, you have a better chance at being successful in it than I was at the beginning. So let's talk about if you wanted to trade the foreign exchange market and those currencies, how would you begin this process? So how it's a little different than crypto is because you have to work through a broker to get on the Forex platform, or at least if you're trying to start, you start with a broker. So I used Oanda. I'm going to recommend Oanda. To be honest, I think you guys should do your own research in looking into Forex brokers. My recommendation would be Oanda. I used Oanda. I never had any problems. Oanda will set you up. You'll punch in all your information, your bank account, etc., so you can transfer funds and trade, but they will set you up on a demo account. It is crucial for you to practice on a demo account. The demo account is going to set up a screen. And honestly, if you're watching this on video, I think I'm going to put a visual in so you guys can kind of get a visual of this. So make sure to check it out on social media too if you're driving and listening to this and if you're new to the market. But basically, you log in, you get set up on a demo account, and then boom, a screen pops up. And it's all these candlesticks, red and green candlesticks. It's the graph, for trading, plus all the currencies working at lightning speed, like real-time speed, to give you the exchange rates. So if you wanted to trade, you could look at the exchange rates and see where the market is moving, and based off making analyses and using trading tools, which we'll talk about, you can start buying and selling whatever currency you'd like to buy and sell. So the reason why I'm stressing the demo account is because as you learn the influences of the FX market, which we talk about too. I know I keep saying we're going to talk about it, but we will. There's so much info to get out there. We have to talk about leveraging first. So leveraging is if I only have $1 in my bank account, which you won't be able to do, by the way. But if I only had $1 in my bank account on my demo account, and, I'm sorry. It's important to know that the demo account is not real. It's just a practice account before you really get out into the market. So they kind of give you a test run. They're like, hey, we're going to give you a practice setup so you can kind of see how things work. And therefore, if you invest your practice money and you lose it, you don't actually lose any money. That is really important to mention. I needed to mention that. But you can also practice using leverage like we were just talking about. So if I had $1 in my account and I wanted to trade at a higher position, so I wanted to trade at a 100-to-1 leverage, meaning that every $1 I had, it was actually $100. Or if I wanted to trade at a $100,000 level, then my broker would set aside $1,000 for me, kind of as a loan, if you will, or a down payment, if you will. The broker gives me a loan. And then as I'm trading $100 or $10,000, I'm trading at that higher level of money. So leveraging is so important to understand, because if you get out into the real market and then the broker is not going to educate you. And that's what I had to learn. I had no concept of leverage in this time, but the broker is just going to give you a loan. You're going to give them the grand as a down payment, and then you're going to be able to trade with massive leverage. You're going to be able to trade with higher levels of money. Basically, the stakes are just higher. So I really, truly would not recommend using leverage until you are an experienced trader. You've been in the market for X amount of years. You know what influences the market. And I almost said, which we're going to talk about. And you feel confident. You feel confident about the market. If you have questions about leverage, we can talk about it more in detail. I could even make a whole podcast episode of it. For the sake of getting through this podcast episode, all you need to know is leveraging is something you shouldn't use. It's very dangerous unless you are, I would say, a pro. And the demo account will teach you how to trade, how everything works, how to place a trade, how to read the currency exchange rates. But leveraging, basically, when you're in a smaller position, you only have X amount of money. If I only had $5,000 and I wanted to be able to put a down payment to my broker, and my broker would give me access to trade at a higher numerical value. So be able to trade as if I had 10 grand, as if I had 50 grand, as if I had $100,000. So obviously would not recommend, I have never done it, would not recommend if you are not a pro in FX trading. Oh, and also I never mentioned this too, but I did in the first episode, but not in this one, that I got involved in artificially intelligent software that could place trades for you in the FX market, which I was very curious about, and honestly I'm still curious about. I, to be honest, have not done any research about AI with the foreign exchange market, just because it was a very traumatic experience for me trying to learn the technology and how it worked and how I would pay taxes and like basically like if it was actually functional and legit to use. So that is also something that's out there that you should be very careful of and very mindful of, but it can't hurt to do some research. As you get really good at trading, you can start looking into AI and see if AI could start placing trades for you, start making market moves for you, and basically you could earn an income in a passive way through that. Of course, it's very important to know how the foreign exchange market runs, though, and what influences it, which is bringing us to our next point right now, which is what influences the foreign exchange market. If I were going to go place a trade, what would influence me or influence my trade to work in my favor? A lot of things can influence it. Number one is when you are a day trader in the FX market, which day trading means that you are buying and selling currencies for profit, but you're only buying them for a very short period of time. It could be a day, it could be a couple days, and I would say at the longest it would be like a week. But obviously long-term investing in the FX market is buying, for example, the USD and holding it for months or even like a year or two to see if it gradually appreciates in time. Just like you would in the stock market if you're buying a share of Apple when Apple just came out and holding it for the long run to see where Apple goes. You can also do that in the foreign exchange market with either buying the USD, the euro, or any other currency that you wanted to. For the sake of this episode too, I did day trading, and day trading is just the buying and selling of currencies for smaller profits, unless you're using leverage, every single day. So seeing the market trends every single day and acting on them. But what is so important to know is there are 3 things that influence the foreign exchange market. Number 1 is your trading tools. So I'm going to shout out No Nonsense Forex on this podcast. No Nonsense Forex on YouTube helped me so much in learning to use trading tools. So if you are new to trading FX, you are with Oanda, you're good on the demo account, you're seeing the graph and all the trending exchange rates, and you want to buy or sell and to make a profit, but you don't know how to read the graphs, I truly recommend No Nonsense Forex on YouTube. He is brilliant. He is also a very credible person in the FX market just by listening to him and hearing how he talks about stuff and what he's talked about. He kind of has like a similar mission, I feel, but he talks about trading tools. So using specific tools on the graph to calculate where the market is going to go. So I would say that is the number one thing. If you're looking into trading foreign currencies for profit, check out No Nonsense Forex. The second thing that is so important is global or world banks. So let's say that Donald Trump is becoming president, which he is. He's becoming president, and everybody in the globe knows that the United States economy is going to skyrocket. We're just talking generally here. The United States stock market, the economy, grocery prices are going to go down. Our dollar value is going to appreciate. If everybody in the world expects that right now, and they go to buy the US dollar, that can absolutely shake up the stability of the foreign exchange market and severely hurt other foreign currencies. So what the global bank can do, in the most easy way to explain, is they can step in and alter where the market is going to go. So instead of having the US dollar appreciate extremely, they can step in, and if they need to, they can modify the market based off their monetary policy and make sure that we don't see an extreme of one way versus the other. So global banks or world banks, which I'm going to list them at the bottom of this podcast episode details so you can see which ones there are. It's not super important to know. It's more so important to know that the world banks control the market when they need to step in. So you could be placing a trade like, yeah, like I know that the US dollar is about to appreciate with Trump in office, and that's not to say it's not true, but it may not skyrocket due to the instability that may cause in the market. So world banks and your trading tools are two massive points to understand in the FX market. Just another little side note that I wanted to mention about the central banks is that they can, in helping with the instability, they can put money into the market, and they can also see where the majority of Forex day traders are placing their money, so they can step in and regulate it if need be. It's not to say that the trade won't go in your favor. It's just to say that at times, if there's too great of instability and everybody is thinking like you, the world banks have to step in and monitor and mediate it to prevent inflation, which is the whole point of the Bretton Woods conference, was to establish the world bank. So when the foreign exchange market opened, there wouldn't be too great of instability due to there not being a moderator or somebody in there making sure that things remain stable. Lastly, the third thing that can affect the foreign exchange market, which we just touched upon a little bit with Donald Trump, is world news. This is so important because if we see that China, for example, is having a massive renaissance with oil usage, or they struck oil and they're going to be able to sell it so much more, we understand that might shift the value of their currency. So in the news, what's going on, it's so important to watch what's going on in different countries and how the news may be affecting the value of their currency. That is also a big deciphering factor of where the market is going to go. So if I would list these in importance, I would say it's the World Bank, the global news, and then your trading tools. Your trading tools are more so for you, so you can make educated estimates about where you think the market is going to go based off mathematical formulas in a way, but nothing will ever beat the World Bank regulating inflation and monitoring the foreign exchange policies and rates and transactions that are happening on the platform, but also the global news and what's going on in the world and what could make a euro more profitable. Are they experiencing economic renaissance and they may see an increase in their currency? So those three factors are so important to know before you start trading, before you just start buying and selling and just going with it and making educated guesses. Take your time to understand what is going on in the world and how that can impact your trading to make you more profitable. I want to switch gears and I want to talk about futures and options trading in the FX market. I just realized that I missed that. Also, if you're wondering why my hair is wet right now, my camera just died midway through this episode, so I just figured I'd shower and regroup and come back, which I'm happy I did because I missed options and future trading in the FX market. It's a little complex. I don't know if we're going to go over it in such depth for this first podcast episode, but they are similar in the way that you can purchase a currency, for example, in the future for both of them at a set price. The only difference is options gives you the right. Futures is more like a contract where the buyer and seller is agreeing to buy or sell at a specific date at a specific price. Options is kind of the same thing, but you have the option, not the obligation to trade. So both of them are about purchasing in the future. And the reason why people might be interested in this is to help hedge risk. So if your portfolio is a little bit higher in risk, some people might use futures or options trading to kind of speculate where the market is going to go, or they have speculations of where the market is going, so they can pretty much balance out their portfolio and kind of make it as like a safety net trade in the future, so they know that they're kind of leveraging off the risk that they have in their portfolio. Futures and options is pretty complex. I never participated in it. I don't see a lot of people participating in it. Usually I hear a lot of buzz around being a day trader or just holding for the long term. So, but it's good for you to know that those options are available for you. And now I want to talk about reading the exchange rates on the platform, and after understanding the candlesticks and how the candlesticks function and our trading tools, how do we actually read the currency pairs to make a trade? So every single currency comes in pairs because obviously you're buying one against the other. So let's give an example. We have the euro / the USD at 1.0123. So the euro is the base currency, the USD is the X, or X meaning variable or quote currency. So I need 1.0123 USD to purchase 1 euro. That would tell me that the euro is appreciating against the US dollar because it takes more than $1 US to purchase 1 euro in this moment. If we reverse this, and we said the USD as the base currency versus the euro equals 1.0123, then we'd know it takes 1.0123 euro to purchase 1 USD, and hence the USD is appreciating against the euro. Let's give another example. Same pair, if we had USD versus euro equals 0.0801. If we had that, we would know it takes less than 1 euro to purchase 1 USD, meaning that the euro is appreciating against the US dollar. So I hope that helped. And also, if you are watching this, I know some people are driving in the car listening, but if you are watching the video with this, I put up an example to follow along so you can kind of get a visual of how this works. But in the simplest of terms, that's how you read the currency pairs on the platform when you're going to place a trade. Another really quick topic before we get into the software that you need to be trading, which I think you guys will be happy to hear, is bullish versus bearish markets. So bullish market is just that the green candlesticks are trending. So green candlesticks are telling us that a lot of people are trying to buy the USD against the euro. If it's a red candlestick and it's depreciating and we're seeing a pattern of depreciation with red candlesticks, we know that it is a bearish market. If it's fluctuating, that just means the market is 50-50 and some people are buying, some people are selling, and there's no grade of trend on where the euro or USD is going, which one is appreciating or depreciating against the other more. There's no significant change. And maybe that is a part of the global news. Maybe there's nothing crazy happening in the market for the USD or the euro at that time, or people are really 50-50 about where the market is going. Or there is a lot of buzz about it selling the USD or buying the USD, and the World Bank is stepping in to moderate that. And that could also be an option of why you're seeing what you're seeing. Let's talk about the computer software that you need to FX day trade. Like I said, I think you guys are going to be really happy to hear this, but I purchased the double screen monitors, the huge hard drive, and for a period of time I was using that to FX day trade. And it's not to say it's not helpful, because you can use one screen to look up the global news. You can use this screen to have the graph up, read the exchange rates, have your trading tools to teach you, and you can kind of go back and forth. And then also you might have better Wi-Fi or just better speed because you're using so much technology for your trading. Though I will tell you that, to be honest, you do not need any of that equipment. Simply, you need your laptop. And what might also be helpful to have is a VPN. A VPN is a virtual private network. It's kind of like a private host where if you purchase a VPN, it encrypts all your data on your computer. So once your VPN is set up on your computer, you have much more privacy. A lot of people like to use this because if they're placing trades and if they have a ton of money that they're leveraging and they have a ton of money that they're investing in this, it may be better to encrypt your data or protect your computer so nobody hacks into your Wi-Fi, nobody hacks into your computer, and all your information is safe. This is also really good for crypto too. I know we're not talking about crypto in this podcast episode, but VPNs are super simple to set up. I think the one I purchased so long ago was like $20 a month, and it doesn't make your Wi-Fi faster. I think this is really important to know because I got confused with that. It's simply encryption for your computer. It's encryption of the data, and so you have more security when you're trading. That's the only thing that I would recommend for FX trading. Of course, if you want to be all over the place and be able to see everything, or if you want to be looking at multiple markets at one time, I would recommend the monitors, because if you're trying to see 6 different currency pairs at once, then of course I would encourage you to get the monitors. But honestly, if you're watching the global news, you understand how the World Bank works, and you have your trading tools, really all you need is your laptop, especially if you're trading. There's so many people, traveling. There's so many people trading while they travel, and obviously they can't lug all that computer software around, so their laptop is their best bet. We talked about a lot in this episode. I just want to do a quick debrief so we understand what we capped on in this episode. So we talked about the bartering system and how that started, which led into the Metal Age, and then eventually we adopted the gold standard. We realized the gold standard wouldn't be feasible anymore because of World War II. So 44 countries got together, we established the World Bank, and we established the foreign exchange market with the US dollar backing the foreign exchange market. We then learned that the foreign exchange market is an over-the-counter market where you can buy, sell, and hopefully profit from buying and selling currency pairs. Some of the examples of currency pairs can be the euro, the Great British pound, the US dollar, and any other currency that any other country may possess that you have interest in buying or selling. We talked about the different ways you can FX trade, which is you could day trade, you could long-term hold, you could do futures, or you could do options trading to help edge or hedge risk in your portfolio. We talked about that you don't need any crazy software to get started, but these 3 things, your trading tools, listening and following the global news, and understanding how the World Bank works in the FX market, is going to dictate your overall success when you're placing a trade. We talked about how to read the exchange rates, how to understand the graph, understand the red and green candlesticks, when they're fluctuating, when they're appreciating, when they're depreciating. And we talked about how you can get started going on Oanda, looking into the demo account, understanding leverage, understanding leverage. And yeah, I think that covers a good gist of the foreign exchange market, at least for beginners. And of course, if you guys have questions, we'll do another episode, or if you just have a few questions, we will answer it in the following episode. I think we're going to be talking about crypto next, unless there's a lot of questions in the FX market. But if there's no huge questions that I feel like we have to make an entire episode, you will hear some answers in the next podcast episode. Thank you guys so much for watching. This was a bit of a mess and all over the place, so I'm glad that you stayed with me. Of course, I want to hear from you, and just like I would say in any other podcast episode, if you're interested in being on the podcast, reach out to us via cryptichumility@gmail.com. If you are curious about our business venture, check it out at www.exchangefxc.com. And I think that's it. Of course, if you have any other questions, you can email us as well. Check us out on social media on X, YouTube, and TikTok. And I think that's it for this episode. Thank you guys again for watching. I hope you had a great time. Tune in next Monday on Cryptic Humility. My name is Vanessa Hurley. Thank you.